we were talking about this when you got here today. A lot of people have a New Year's resolution of buying a home. Mm-hmm. You know, they've been planning. You know, maybe they're Dave Ramsey people like you and I that you know, attempt to follow a budget and a plan, and they want to make sure that financially they're sound and they've got all these things in place before they make the home a priority. Speaking to that, what are some tips for a person that's thinking about buying a home in the new year, but maybe they got some slight credit challenges, maybe they need some credit repairs, some things they need to do, or some things they should avoid this holiday season?
Okay, well, even this is actually for listeners out there. Even if you don't have bad credit per se, these are things that you really need to be aware of. And the reason I say that is I can't tell you how many times a month we will take someone who has a 700 score and help them get to a 720 or even a 740 in some cases, where 700 is not bad credit at all, but that gives them a better rate. If they're getting a loan mortgage insurance, the mortgage insurance is substantially less. So even if you don't have bad credit, these are things that you need to be aware of. One of them, especially in time for the holidays here, is one of the biggest factors on your credit score is what's called debt to available debt. So if you have a credit card with a limit of $1,000 and your balance is $900, you will have a worse score than if your balance was, say, $100. It typically works in 10% increments of the balance. So the lower that you get down that, the better off you are. Now, with that being said, don't think for 1 second Visa doesn't say, hey, Andrew Duncan just made a payment on his credit card. We're going to go and report his balance to the credit bureau now. They're going to report all 20 million clients on the same given day of the same month. So it ain't like you make a payment and they report your balance. So you need to know that reporting date. Usually it's within 3 to 5 days of the cutoff date of your statement. So if your statements run through the 20th, probably by the 23rd or 25th they're going to report. So the best way to do it, if possible, is you just keep it low and leave it low. That way, no matter when they report that balance, you'll get the benefit of the score.
But you could also, one of the other tips on that same token is you could see if your credit card company will increase your limit. And then your ratio used is a lot less, so then you look a lot better to a potential creditor, because instead of using 900 to 1,000, you're using 900 to 5,000.
Right. It's a relative number, so if you can get them to increase, that can also benefit.
Of course, without hitting your credit.